some of you guys would have seen that post I made this morning regarding targets that we've been talking about for a while now. Strictly chuck that on just to show you guys. If I can find the bloody thing. Ichimoku, there we go. So looking at this flat spot here on the bottom of this cloud, on the side of the cloud there, and we can see how well that lines up with where we just hit perfectly to the dot almost, or just sort of kind of. But you can see how what I was getting at when I say it's kind of like a hidden level of support and resistance. Just because if you look at candle structure, that line that we looked at here for the Ichimoku cloud, it pretty much just cuts through all this stuff like it's noise. So, you know, most traders would have potentially been looking at any of these sort of candle close areas, or, you know, like this, or even that wick up here as potential targets. But, you know, and then they would be looking at those as targets, and then it will fall short, and they would think, oh, it fell short of target. But, you know, really, if you're looking at Ichimoku, it was bang on. Like, that was pretty bloody close. So something I found interesting when we started to kick up over the weekend, I think it was on Sunday, when we started to kick up again. So the Ichimoku, as we know, it's really good for trending markets. Like when there's a strong trend, you can use Ichimoku. It's a good indication to get in or out of the trade. And we can see here, if we go back to about here, this was pretty much the first indication that we were potentially heading pretty bearish. So lag line touched the candles first. That's your first signal. Your base conversion line have gone from having volatility away from each other and pointing up to now all of a sudden pointing sideways and coming a little bit closer together. Predictive clouds starting to flatten out as well. You know, when it's in a nice steady trend, it generally points upwards. You can see here it was sort of pointing upwards the whole way, and then all of a sudden we've gone flat here. So even though the predictive cloud's still bullish, it's starting to consolidate and go sideways. So as the candles sort of go through here, you know, that's a no trade zone. So just generally means the market's consolidating. As it got closer, we actually got a cross here, I believe. Might be a bit hard to see unless I make this a bit bigger. Just make that conversion line a bit bigger so you can see it. Like that. So we actually got a cross here. So that was a bearish cross, and the lag line had sort of moved in, and, you know, things were kind of looking pretty bearish. That was pretty much the head and shoulders that most people were looking at. Left shoulder here. This was your head. That was your right shoulder. So a lot of people would have been looking to go short here. Few bearish signals made sense. Needed a stronger retracement, but that was a bit of a fake out. So push straight from 8K. We broke out from there, started heading up, and now all of a sudden we've got bullish signals on the Ichimoku. Again, lag line leading by breaking out from the clouds, and then the base conversion line started to cross back over. There we go. But that's where we're up to now. So they have started to cross back over, but I don't think this run's really going to be that powerful. You can see we've broken out the current daily pretty bearish after we tagged that hidden support level or hidden resistance level there. Current daily's open pretty bearish, and yeah, it's not looking too crash hot. A little bit of a wick to the downside, which shows that there is still some buying power here, but overall pretty bearish candle after this this wick to the upside on today's close, this morning's close. And yeah, a little bit flat here on the Ichi, so it doesn't look too crash hot. I'm not going to sort of call us dropping back down from here. I just don't think we're going to have this crazy momentum like we had with these $1,000 candles through here. I wouldn't be surprised if we come down and potentially retest this top here around 8.7, or even lower. I can draw more. This range that we were stuck in for a while, we might even come down and retest that before making another push for that 10,000 mark. And I think that's going to be a number that a lot of people are looking at. And one thing to get your head around as well, when there's a number that a lot of people are looking at, it can sort of throw you off, because you'll be looking at 10 and you know that everyone else is looking at 10 as a potential take profit, because it's going to be a hard resistance to break because psychological number, blah, blah, blah. So what can happen is, that if they really want to mess with you, talking about the bankers and the whales and stuff like that, they could be thinking like, well, everyone's going to short here. So let's just run it up. Let's drop them all out of the game. Let's buy all their Bitcoin as they sell at a resistance level, and we'll just push the price up. And then they're going to FOMO back in and buy it up higher, because that's normally what happens. They jump out of the market to target, and then it breaks through, and they're like, oh shit, and they quickly jump back in, technically lose their position, and try and ride up as far as they can. So that happens all the time, and sometimes they can flip it as well. So they do the fake break and bring all the breakout traders in, and they start eating up all the liquidity to drop short. So, potentially what they can do is run the price up, pop it above, and then all the breakout traders are, they're going to FOMO in and start buying here, thinking that we're going to push up higher. And then basically what happens is they fill up a whole heap of shorts, and then it just falls. And that's because they set walls. We would have seen buy walls and sell walls and stuff like that before. They can hold price if they want to. And, a lot of people sort of say like, oh, trying to get rid of all this shit now. A lot of people say, whales don't have that much control over the market and it's not manipulated, blah, blah, blah. It is so manipulated, it's not funny. And I don't think it's that hard for them to do it at all. And you've seen it numerous times on all exchanges where you see big buy walls and sell walls just appear out of nowhere and hold the price in a set range. And that's kind of what happens. Like say for example, this is an area that they want to short from. They want to fill shorts from this area here. They'll essentially block the price from going anywhere with a big sell wall here and a big buy wall here. All right. And essentially all they're going to do is just keep buying off all the people who are trying to sell here. Price will, and this is kind of what happens in this sort of stage here. They'll hold the price down. Price will just bounce around. Meanwhile, the lenders and stuff like that, they're all just taking these trades. They're buying whatever their idea is. They want it to go down, for example. They'll just be filling shorts, getting everyone to sell their Bitcoin. Buy their shorts. And then when they're ready to go, they just make this one disappear. Boom. And all of a sudden, back down it goes. But by having a wall there, by putting up a buy wall, they stop the price from moving out of this range. Because every time it comes back down, boom, they're buying Bitcoin off themselves. And it comes back up, and then the retailers are buying the pump, and then they're selling some more to them, and then it hits here, and instead of it going higher, bang, it hits the resistance and comes back down. It just keeps bouncing around here until they've collected enough that they want, and then they go, rightio, let's delete this one now, and then price will just fall straight through. And normally those key levels as well is what everyone else is looking at for stop losses. So if they're getting a whole heap of buys here, if they're taking a whole heap of buys off the market by going short, once they drop this barrier here, this buy wall, essentially that's where everyone's stop loss is. So price comes down, wicks everyone's stop loss, and it just picks up momentum and gets moving. And the same thing can happen to the upside. If they want it to move higher, they'll set a buy and a sell wall. They'll trap price in a range like this until they're happy with what they wanted to collect, and then they'll delete the wall, and away it goes. Price can move back onto its sort of organic movement, in sort of organic movement. So you've got to be wary of that as well. So what I was trying to get at is 10K, most people are thinking, oh, it's going to hit 10K and come down. Be careful, because what they can do is fake people and push up. And they fake people and push up, and all these people who sell thinking it's going to come down, FOMO back in, right? Because they think it's going to keep going to 12 or whatever. But yeah, if they rip it back down, you could sell on a big red candle, buy back on a big green candle, and then it rips you right down. You're like, ah, shit. And then you sell down here. So a little wiggle here, they could go something like this. Rejection, you go, ah, shit, sell. And then they go, boom, you go, shit, buy. And then they go, boom, you go, ah, shit, sell. You literally just lost so much of your position, especially if you sorry, my headphones. Especially if you're doing too much when you do it as well. So small position sizes whenever you make a trade. Remember that. Even when it's Bitcoin, you don't hedge so much of your portfolio back to a stable coin. Treat it like a trade. Now you can go a little bit more aggressive. We've done our risk calculator that we've been developing a little bit in the background as well. Craig's done some pretty amazing work on that. We might even share a little some a little bit later. But yeah, when you're making moves like this, you probably should be all BTC, so no alts. And yeah, for example, 100% of your trading portfolio is in, say, Binance. You would not sell 100% of your portfolio here, then buy back 100% and then sell another 100%. You're just going to lose way too much of your position. It should be more like 20 or 30%, if you're really sure and it's going to come down, just so you don't make too many mistakes. That way, you're not going to really sacrifice a whole lot. Look, taking a risk and going 100% out to packs because you believe selling here is a good point because it's going to come back down to here or something like that. Yes, you will take the most advantage of it if you hedge your entire portfolio, wait for it to drop and buy back. That's the best way, or the way you can make the most money, essentially, by doing a cover trade like that. But it's risky because you're really you're out of the game and you're hoping it comes back down here so you can get it into the game. If that doesn't come, you're going to end up buying higher and essentially lose sats. And that's really what you should be doing in this game, is worrying about your sats, not so much the dollars. But just keep that in mind. Now, I wanted to quickly talk about this as well. I know a few of you guys are in the same situation, and we've talked a little bit about it before. There's still a few of you guys who are sitting out of the market waiting for a big retracement and stuff like that, which I do applaud your patience and your discipline for staying out of the market and staying true to your trade plan, which is, no, I'm waiting for a big pullback. That is great. But every time the price goes up, I hear the same thing again. Oh, this is killing me, blah, blah, blah. I get it. I understand. And I think what may help is to just get your psychology a little bit right around this. This comes back from investing and trading. They're kind of two different things, and you need to set them apart. Now, when you're talking investing in crypto, that's sort of what you would put in your cold wallet storage. So a lot of us have got these Alipals now. So we've got our investment portfolio, which is our BTC that we want to keep in our Alipal, nice and safe, out of the way. I'm not interested in trading it. I don't have time to trade that shit. I'm going to put that in there and leave it there. And hopefully when the time's right, I'll worry about selling it or using it. I sort of use it from time to time anyway. I transact with Bitcoin quite a lot, but that's kind of my not trading portfolio. That's my hold on to that portfolio. It's pretty much just Bitcoin. So that's my investment side of crypto. So a lot of people say, are you investing in crypto? I don't invest in crypto. I trade crypto, but I invest in Bitcoin. So I invest in Bitcoin by putting some Bitcoin in a portfolio and I hold that. Then I have some Bitcoin that I trade, and I obviously leverage altcoins to make more Bitcoin. I'm still not really interested in holding any altcoins because I personally don't believe that many of them have a legitimate future. If you believe otherwise, that's cool. Buy whatever you want. But for me, I think most of them are rubbish, or just don't need a coin to begin with. So once people smarten up and these things start to actually work, people will realize, oh, this doesn't actually need a token. What a waste of time. And then they start to capitulate and just turns to shit. So I don't want to be involved in any of that. So I'll trade them, make my money, but not interested in holding altcoins. So I don't invest in crypto apart from Bitcoin. So you need to separate those two. Now with an investment, as much as you would like to buy Bitcoin at a good price and hold it and wait up, are you buying Bitcoin as an investment to make money on it tomorrow and sell it? All right, that's something you need to ask yourself. If you wanted to buy Bitcoin as an investment, are you wanting to buy it here today and sell it here tomorrow as an investment? If not, then who cares if you buy it here today and it goes like this? All right, and then it might go like this, and then it might go like that, then it might go like this, then it might do this, then it might do that, and then it might do this and that and that. And then all of a sudden, a month later or 2 months later, you're miles ahead from where you bought it. As an investment, you should be sort of basically every time there's a big red candle, like a couple of big red candles like this, that's when you should be buying. Here, 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 here. This is when you've got that spare money on the exchange. That's why I always leave some money on the exchange. Even if it's a couple $100, I normally leave $250 on there. And if an opportunity arises, like a couple of big red candles, I will buy some Bitcoin with that $250. And then next week, I'll probably chuck another $250 and leave that there. That $250 can sit there for a month. If the market doesn't give me an opportunity, like another couple of big red candles, it'll probably just sit there. It's $250. And you'll be sort of spewing if you think about it, because I could put $250 on the exchange and not buy anything right here. And then the price goes all the way up here and I still haven't bought. And then it does this and I buy here and I think, wow, that was a good move. But really, I should have bought down here, but it doesn't matter. That's my game plan. Buy on a couple of big red candles. Don't buy on a big green candle. Don't try and chase it. If you chase it, you got a chance of it coming back. If you buy on a big red candle, you got a better chance of it moving up. But I don't really care what price I buy Bitcoin for when I'm investing. The Amber app is a perfect example. Who gives a shit what price Amber buys the Bitcoin at? It's just buying some Bitcoin. Before you know it, you've got a couple $100 worth of Bitcoin there and you didn't even realize you did it. And you would have bought it in all sorts of shit places. It would have bought some here, it would have bought some here. At the time, this would have been a shit place to buy it. You know, it would have bought some here. You know, a couple of days later, that was a really shit place to buy it. But who gives a shit? Within a couple of weeks, we were laughing. I probably bought it here and it probably bought some here, and I wouldn't be surprised. I think it bought $12 worth today. Probably bought right here, right at the top. Who cares? If it comes down tomorrow, come down next week, come down next month, I don't really care, because I'm not looking at selling my investment Bitcoin in the next month. So I don't care what price it goes to in the next month. If it drops and drops 20, 30%, yeah, it'll suck because I could have had a much better position. I'll probably buy some more, right? But I'm not looking at selling my investment Bitcoin anytime soon. So I don't care what it does anytime soon. I care about what it does in the next 4 or 5 years, something like that. So for the investment side, if you're on the sidelines and you really want to get back into Bitcoin as an investment because you want to have some Bitcoin for the future, who cares what price it is? Because I'm pretty sure you think it's going to be worth a lot more than 9.2 whenever that time comes that you want to sell. So who cares if you're buying at 9.2 if you think the price is going to be 80,000? Yes, better to buy it here, better to buy it here, better to buy it down here. But what's the difference when you scroll out like this, just to give you an example, $80,000, whether you bought it today or whether you bought it a couple of days ago, yes, big percentage wise, but do you think you're really going to give a shit? Even if you bought the bottom, look at the difference, 2,000% versus 1,000% or less than 1,000%. But do you think you're really going to give a shit? When Bitcoin's worth hypothetically, Bitcoin's worth 80 grand, are you really going to give a shit whether you bought it at 7.5 or 7.1? It's not going to make a difference. All right, that's the investment side of things. Now, trading. I still recommend, look, if you're not interested in investing in Bitcoin, well, then it shouldn't even matter what price Bitcoin is, because you're looking for trade setups. All right, so if you're not even interested in investing in Bitcoin and you just want to trade Bitcoin to make money, and you're still sitting on the sidelines thinking, oh, I should have got in, who gives a shit what price Bitcoin is? If you see a move coming, then that's when you should be trading it. So if you see a big down trade coming now, well, then that's when you should be jumping into a short. Who cares what price it is or how long you've been sitting on the sidelines? You see a trade set up, you're going to jump into it. Same thing is if you see a breakout coming and you're sitting on the sidelines thinking, oh, I want to wait for a bigger pullback. Why? It's got a breakout trade. If it's got a breakout trade, trade it. Make 20%, make 10%. Get out, right? You get in, you get out, you make your profit. Who cares what price it is if you're trading it? You're trading price action, not the actual price. Just forget the price. You could almost cross this off and all you're looking at is either pips, you know, in terms of Forex, look at pips or look at percentage. Who cares what the actual dollar value is if all you care about is trading it? It does not matter. Okay, so for the guys who want to do a bit of both, they want to invest and they want to trade, there's your answer. Who cares what price Bitcoin is now if you're buying it as an investment for the next 10 years? All right, because if you're buying Bitcoin for an investment for the next 10 years, I'm pretty sure you think it's going to be worth a little bit more than 9.2. Okay, if you want to get back into Bitcoin because you want to trade it, well, if you see a trade set up, why are you not in the market? Why are you still sitting waiting for the best opportunity to take a trade? Sometimes the best opportunity doesn't arise. Like sometimes the best opportunity is now. I'm not saying FOMO into the market now, don't get that. And I think I said this to Matt the other day as well. Sometimes time in the market is better than trying to time the market, because the more you sit here trying to time it, trying to catch this, sitting through all this shit, waiting for this move, you've just missed all of this growth because you were trying to wait for the best possible spot to buy. You were trying to wait for the top. You were trying to wait for the bottom. You were trying to catch the perfect trade, so you stayed out of the market and you missed all this growth. Right? Sometimes you just got to bite the bullet and jump back in. But just remember, when you jump in, it's probably going to lose straight away. Just because it's like when you buy on ComSec, you buy a couple of stocks on ComSec, bang, you're already in negative because the price hasn't moved. Your spread was shit, so you probably paid a shit price, and you've just paid $10 fee. You're already negative, right? That's going to happen. When you buy Bitcoin, you got to expect that straight away you're going to be in a negative. You're going to chuck 10 grand in, and tomorrow it's going to be worth 9.6 or 9.5 or something like that. Oh, I just lost $500. Doesn't matter. As soon as you buy, you're going to lose, right? But you're not worried about the short-term loss when you're shooting for a 10-year growth plan of, 80 grand or 100 grand, 250, 1 mil, like old mate says, 1 mil. If Bitcoin ever gets to $1 million, do you think you're going to be kicking yourself that you didn't buy here rather than here? I don't think it's really going to matter that much. Is that making some sense to people? Are people getting it?